Hey everyone, it's Ryder from Skip. It's Monday, August 30th. Important video today on EIDL loans versus lines of credit versus term loans for your business. And in what cases may lines of credit actually be better for you than an EIDL loan? This all comes down to the interest rates and how much you will have to end up paying back to the lender, whether it's the federal government and the SBA via the EIDL program or a private lender through other lines of credits or term loans. Very important video today because I know millions of you are still looking for more funding for your business. You're waiting for EIDL loan increase news. I'll give a quick update there. And you're wondering what you can do to be proactive, if anything. Well, the good news is in this video, there are things you can do. You do not have to wait for the SBA to get back to you if you need capital for your business. Be sure to watch until the end where I will give a summary and compare all three options and what actually might be best for you. And thank you so much for giving this video a like. It really means so much to us. If you're new, consider subscribing. It means so much to us. You can say you are part of the first 100,000 subscribers to Skip, that you are part of the original community, and you made these daily videos possible. We asked this poll 2 days ago directly to you. How long have you been a Skip supporter? 38% of you say over 1 year, 30% over 6 months, 14% over 3 months, 18% of you are new. We have a whole team dedicated to finding information and making it easy for you to understand whether it's for your small business or other government related needs and services. And go check out our Skip app. It's Hello Skip in the App Store and Google Play. We have a brand new funding tracker. I'll leave the link right in the description below. So today marks officially 2 weeks since the SBA said they would announce EIDL 2.0, which would increase the EIDL loan limits to $2 million and increase eligible uses of funds. They said they would announce it on August 16th. We're still waiting, and I suspect it is because so many of you are still waiting for your original EIDL loan increase reviews. According to this poll last week, with over 3,000 votes, 23% of you are still awaiting an initial decision. 50% of you have been denied and or are trying reconsideration. So because so many of you are still reporting that you're waiting, it is perhaps the SBA's decision to wait on EIDL 2.0. But we are standing by like always. And on our website, we have an EIDL loan increase calculator. If you want to see how much you might be eligible for, log into your Skip dashboard. If you're new to Skip, go to EIDL2.com. You'll be able to add your email and calculate your potential increase. We're adding more and more calculators in the coming days and weeks. This is important because, like I said, you as a small business owner have options. Besides growing your business, marketing, getting more customers, focusing on the product, etc. There is funding out there. And as I've talked about a couple times now, Fed Chair Jerome Powell has indicated that these easy money policies, these low interest rates, to help ease some of the economic stresses that have been felt over the past year and a half because of the pandemic, may be coming to an end. So these easy money policies, record low interest rates, certainly won't last forever. So there is capital out there. And of course, if you have a good credit score, in a video last week, we spent a lot of time on this, 5 ways to instantly improve your credit score. If you are in the 500s, how to get up to the 600s. If you're in the 600s, how to get up 700, improve by 50 points, 100 points. Relatively quickly, we go over some of these tips. So after this video, I recommend watching that. I will link to it at the end of this video because this ultimately determines some of the most important things, what your interest rate will be and what you are eligible for you or for your small business. Your options will increase substantially. So many of you know the terms of the EIDL loans like the back of your hand. 30 years, fixed, 3.75% interest rate, no prepayment penalty. That's tough to beat, period. But there are alternatives, especially when you take into account the waiting game. How much time are you going to have to wait for EIDL loans or increases if you're still waiting? Is it worth having other options in your back pocket? I've typically said yes, it is worth having other options in your back pocket. It depends, of course, where your business is at, how you're feeling about the future prospects when you look ahead 3 months, 6 months, 12 months. But of course, like anything, having options on your plate are important. So I'm going to add to the mix, besides the EIDL loan, a term loan and a line of credit. What is a term loan? It's a lump sum of money that you receive at one time, then paid back with equal regular payments at a fixed interest rate. Term here refers to the number of months you have to repay the loan. So typically when you apply, you'll choose how long you want the term loan for: 6 months, 12 months, 24 months, 36 months. This is an example of Funding Circle, who's one of our partners. Link right in the description. We recommend using the link right below to find out what you're eligible for. We're one of their preferred partners. You'd see something like this when you apply. You can select your range and the term you want from 6 months up to 10 years. It takes a few minutes to fill out, and then of course you can see what you're eligible for, a number of factors here. Now we go into some of the pros and cons here, but term loans can be used for purchasing equipment, buying real estate, working capital, and other reasons. Many prefer term loans because they're typically longer, several years to pay off, like I just showed you in that example, and there's a predictable payment schedule. By the way, this post is on our app. Just go to HelloSkip in the App Store and Google Play. It goes over everything, including pros and cons, and links to our funding partners and how to think about some of these trade-offs. You know, like anything, there are pros and cons, so you can read them here before making a decision. I'll also link to this post in the description. Okay, so how does this compare to a business line of credit? A line of credit operates similar to a credit card. A lender approves your business for a specific amount, and you draw on it whenever you need it, and you make typically monthly payments toward that balance. So basically it's like a revolving line of credit. You can pay it off, draw on more. Lines of credit typically don't have term limits, so you can borrow and pay back the line of credit responsibly. So this is an example from Bluevine, one of our preferred partners as well. Link right in the description. Highly recommend. Here's how it might look. You'd have a dashboard where you can see your available credit. In this example, they're saying you have $50K available of your $250K line of credit, and you can see your draws when you draw on that line of credit, when you make payments towards that draw. So that's basically how it works: drawing funds, making repayments, accessing more funds. Now, so one of the pros here is, of course, you only pay interest on what you borrow. So you have this safety net, you have something available, you can draw on it if you need it, but you don't have to. You can use it for a variety of business needs. However, if you make late payments, interest rates can be very high, and these may be harder to qualify for. I'm not going to go into all the pros and cons, but I did mention I would try to set them side by side for you to think about, again, for illustrational purposes only, but I wanted to put this up because I think it's important to talk about some of the myths that exist when you're comparing EIDL loan, line of credit, and a term loan. We've all been so fixated on the EIDL loan. You can't really beat it, but there is some argument to be made for private lenders. A quick example for illustrative purposes only. I reduced a lot of things, so all the caveats apply here. You know, I'm not personally approving your funding situation. Of course, the EIDL interest rate's 3.75%. Line of credit in the Bluevine example starts at 4.8%, so we could even round it up to 5% here. And same for term loans, like Funding Circle, we could round up to 5% here. And there's other partner lenders, by the way, that are listed in this post as well. Now, of course, like anything, the interest rate's the most important thing because you can finance anything. The question is, over time, what's that interest going to be versus the principal amount? So some quick math I did right here. You know, if you took that $100,000 loan, and let's say that principal stayed the same throughout the entire period, and you just paid down interest over 30 years at that rate, you would pay back more than the original loan amount. You'd pay back $112,000. That, of course, makes a difference. But when we divide it daily, we see EIDL, $14 a day. A line of credit in this scenario could be $19, $20 a day. Term loan, similar amount. However, let's say you took a larger EIDL loan amount up to the $150K cap. That was the original cap, of course. Let's say you took it because it was available. Again, you're getting interest on this from day one, and it's starting to accrue every day. So in this example, you see the daily interest for the EIDL loan has gone up. Now, what if you instead took the full $500,000 EIDL loan? That's the current EIDL loan limit. Your daily interest approximately would be $71 per day. That is substantial, and that is starting to accrue the minute you sign those closing docs and that money hits your bank account, whether you need it now or in 6 months or in a year, versus a line of credit when you only get charged interest when you draw on that and you can pay it back. There's usually no prepayment penalty, so your interest could go back down to zero. Then you draw on it when you need it, pay it back quickly. For a term loan, you have that set interest rate, and sometimes there's prepayment penalties, sometimes there's not, but you can more customize what you want and think through some of the pros and cons of each. So that's the main reason I wanted to show you this today, and why in some cases, depending on the situation you're in. A line of credit could be better, a term loan could be better, or an EIDL loan could be better. It just depends on how much money you need now, how your business is doing, and what you foresee happening in the future. Again, the links to this post and our 2 preferred lenders are right below. So of course, that's something to think about. If you are the 75% of people that are still waiting for your EIDL loan increase, you're either waiting for an initial decision or you've been denied and are trying reconsideration, you may want to have something in your back pocket. So my final thoughts here is, if you have the time and you want to explore options, go click those links in the description. Just see what's out there. Give yourself some options and put yourself in a position of power rather than waiting for loan officers or the SBA top brass to make a decision on EIDL 2.0. You can actually be proactive if you want. We've got more options coming for you in the coming days and weeks in these videos and on our app, Hello Skip, in the App Store and Google Play. Most importantly, don't forget to give this video a thumbs up, subscribe, and turn on the alerts. Stay well, stay healthy, and I'll see you tomorrow.